This is King World News. I'm Eric King, and you're about to hear an incredible interview with legendary investor Jim Rogers. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we also have one of the top technical analysts on Wall Street, Luis Yamada, founder of Technical Research Advisors. Plus, we have a major supporter of Ron Paul's H.R. 1207 bill to audit the Fed, the controversial but never boring Congressman Alan Grayson. Also on the Gold Plus page, we will have part 2 of a 4-part systemic failure series with Jim Willie of the Hat Trick Letter. Joining us now from Asia is legendary investor Jim Rogers. Jim, I have so many questions for you, so let's just jump right in here. You are correctly worried about protectionism. I noticed that from a recent interview you did. Can you elaborate on the dangers of protectionism as you see it, Jim? Because that exacerbated the Depression of the 1930s, did it not?
It certainly exacerbated. There are people who think it caused the Depression of the 1930s, but if nothing else, it exacerbated the Great Depression. When people can buy and sell anything they want with each other, they do so. You go to the cheapest source of goods, and you buy them. We don't buy television sets from America anymore. We buy them from the Far East because they're so much cheaper and better, and we're all better off. The Asians then have money that they can spend with our farmers buying wheat or soybeans or anything else. So open markets are good for everybody. You can move your money around as you wish. If you want to travel to London, you don't have to worry about huge exchange controls or problem taking your money in and out. But when you start closing these things off, it cuts trade. Obviously, if we cannot buy TVs from Asia, if we buy them from America, we buy very expensive TVs, and they're not so good. But then the Asians can't buy anything from our farmers, and so our farmers suffer. So everybody suffers. And, of course, that leads to problems that we cannot take our money to London if we want to go traveling to London without all sorts of controls. So we don't travel to London, and the English don't travel to America. So the next thing you know, the economy spirals downward, and you have recessions and or usually depressions.
You have no shorts at this time, Jim. Is that because of your concerns regarding the tremendous money printing globally?
Well, it's two reasons. One, yes, there's all this money being printed. It's got to go somewhere. And I've learned that irrational things can happen when you start printing a lot of money, and people are doing things not on sound fundamental basis, but because they got to do something because they have so much money. The other reason is I don't see too many things, or I don't see anything, in fact, where there's a great excess. I don't really like to short unless I see some excesses. Normally, in the world economy, there's some excesses somewhere. I don't see any now, maybe things that are too high priced, but I've learned over the years that shorting something just because it's high priced can cost you a lot of money because it can become higher priced or it can go to excess. So I don't see any excesses at the moment. If any develop, I hope I'm smart enough to sell them short. I'm sure I'll short them too soon. I usually do. It costs me money, but that's my approach at the moment.
Well, let's talk about something that might be to excess. From a recent interview, you stated, quote, learn to sell short government bonds. That is the next bubble, end quote. Where should interest rates be in the United States today, Jim? I know the answer is obviously higher, but can you give me any guess as to what an appropriate percentage rate to compensate for the risk of purchasing U.S. bonds would be?
Oh, if I told you that, you'd hang up.
I know we're in for tremendous inflation. What are your thoughts there?
Well, I cannot conceive of lending money to the United States government for 30 years in U.S. dollars. The U.S. dollar is a terribly flawed currency and getting worse. I just cannot conceive of lending for 30 years at 3 or 4 or 5 or 6% interest. I would suspect before this is over, interest rates will go back to where they were at the previous highs, the long-term government bonds in the U.S., because the debt is staggering. You know, the last time the high-end interest rates on the government bond in the U.S. was about 15% in 1981. Well, in 1981, the United States was still a creditor nation, in fact, perhaps the largest creditor nation in the world. And we did have inflation, but it wasn't that serious. And yet even then, interest rates went to 15%. I would suspect now, given the fact that the U.S. is the largest debtor nation in the history of the world, that before this is over, interest rates are going at least back to 15%. Now, I didn't say it's going to happen this year or even this decade, but before this is over, it's certainly going to happen.
I just want to play a portion of a response from one of your interviews.
The real problem, Julia, over the past 10, 15 years has been that the regulators have not let anybody fail. They have pulled in crony capitalism. Every time somebody got into trouble, they would call up Mr. Greenspan or Mr. Bernanke and say, "Save me." And they would save them. They would prop people up. Had they let people fail, we would have solved this problem long ago. They refused to let the market do what the market's supposed to do.
Jim, this was from a speech that Greenspan gave in 1997 in Belgium. Quote, "Thus, central banks are led to provide what essentially amounts to catastrophic financial insurance coverage. If the owners or managers of private financial institutions were to anticipate being propped up frequently by government support, it would only encourage reckless and irresponsible practices," end quote. On the one hand, Jim, Greenspan is saying this encourages reckless behavior. And then on the other hand, as you were correctly pointing out, Greenspan is bailing everybody out. What's the story here with Alan Greenspan and this whole situation we're in today?
Never really been right about anything. You can go back over his career, back to the 60s, 70s, 80s, etc., and it's just mind-boggling how wrong he nearly always was. Not occasionally, but he was nearly always wrong about everything he said or did. Certainly when he was in the private sector, eventually his company failed because he just couldn't get it right. And there was no reason for people to listen to him or to invest in his company to keep it going. As the head of the central bank, the same thing. For whatever reason, Mr. Greenspan, whenever his clients, former clients, would call him up and say, "Hey, save me," or what they would say is, "Look, Mr. Greenspan, the whole system's going to collapse if you don't do something." And Mr. Greenspan, not being a very smart person or knowledgeable person about finance, would run around, because after all, these were his former clients on the phone, saying, "Okay, we've got to do something. We've got to save the world." And so he would quickly come to the rescue of anybody who called him, if they were his old friends or old clients. I mean, if a fireman from Louisiana called him, he wouldn't even take the call. If a plumber from Nebraska called him, he wouldn't take the call. But if the head of a Wall Street firm called him, he would take the call instantly.
From that same speech, on the other hand, if central banks effectively insulate private institutions from the largest potential losses, however incurred, increased laxity could threaten a major drain on taxpayers or produce inflationary instability as a consequence of excess money creation, end quote. That is exactly where we are now and headed in the future, is it not, Jim? A major drain on taxpayers and producing inflationary instability as a consequence of excess money creation?
All you have to do is get out your newspaper or go on the internet, the radio, and you see the debt is now staggering. The United States, the amount of debt that the U.S. has taken on in the last 2 years has never been done in the history of any country, ever. The Federal Reserve has at least tripled its balance sheet with garbage. It used to have nothing but government bonds on its balance sheet. Now it's full of debt which may never be paid. The federal government has increased its debt by, we don't know, maybe 4 or 5 times. One reason we don't know, is because they've guaranteed all of Fannie Mae and Freddie Mac's off-balance sheet derivatives, and nobody knows how big they are, including Freddie Mac and Fannie Mae. They've guaranteed AIG's derivatives. Again, nobody knows how big they are. So the U.S. government may have increased its debt by 600%, 700%, we just don't know, in the last few years. And this is totally out of control. Mr. Greenspan was right when he said that back in 1997. I wish he could read his own speeches.
What should happen then to regulators that failed the United States? What should be done then, Jim? Because I know you've relocated in Asia, but you're still a taxpayer of the United States. What should happen to these guys?
Well, they should certainly be fired, if nothing else, because it is staggering. You know, the regulators went to see Madoff 6 times in 12 years, and you read the reports that they came back with, and they would say things like, well, the people who are claiming Madoff is a crook don't understand Madoff like we do. Can you believe? I mean, they said that in writing, that they understood better than anybody else. Even Mr. Madoff thought they were idiots, and they were idiots. And yet now, you know, they're getting promoted. They're not losing their jobs. They keep their pensions. But if you and I had done that in the private sector, we would be in jail. A lot of guys from Enron are in jail, and some of the other companies are in jail, and many more should go to jail. And yet these regulators, these bureaucrats, get off scot-free and often get promoted. If I were Mr. Madoff's, you know, creditors, one of the people who lost everything because of the fraud,